Welcome to the Dividend Talk podcast, episode 143, Swedish Dividend Stocks. Whether you're a seasoned pro or just getting started, Dividend Talk is the place to be for insights, analysis, and unsalted advice on how to make the most of your money through dividends with our own unique European flavor. Oh, and don't forget to subscribe to our podcast and join our community on Facebook at Dividend Talk. See you on the inside. Hey, European DJ. How are you, buddy?
I'm doing really well. It's Easter break is starting now, so I'm actually really excited for this because the food in Poland is always so good. I do hope it will be a bit better weather than it was so far, because today was all time raining. But if there comes a little bit of a sun, then I will be a happy guy. How about you? How are you doing?
We're polar opposites. We've had some good weather today, yesterday, and we are due to rain as you could expect for the rest of the week. So today was quite a nice day outside. It is also Easter over here, but when you say good food, I'm confused because Easter just means chocolate.
No. Here in Poland, you get a lot of traditional food as well, lots of fish and such. So no. It's really good here, and the mother-in-law will prepare. She can cook really well.
Nice.
I mean, you don't know what a Polish mother-in-law means, but it means you'll be stuffed, but delicious, really delicious.
Nice. Sounds good. I'm still going to enjoy my Easter eggs, which is full of chocolate and no nutritional value whatsoever, but it'll still be quite nice.
And I'm actually even more happy because last week we had our quarter performance review, right? And I didn't have my BHP dividends yet. So I got them in. They were actually already on the account, but Interactive Brokers just didn't have it in the report yet. But it means that instead of 20%, I had 30% more dividends compared to last year. So also here, I was really, really happy with that one because, it just shows the growth. And I remember you asked me like, oh, why are you not so happy? And I felt like, But now I'm happy. Happy.
Yeah, I find that with Interactive Brokers, because I have T. Rowe Price split across both the Hero and Interactive Brokers, and it shows up on the Hero account straight away on the report. And it took an extra 2 or 3 days for it to come onto Interactive Brokers. And I didn't even realize it until you said it to me, and I went back over, and I remember at the time going, I don't know why I'm missing these, but
they have the date then from 2 days ago, right? So I just wonder, the money then really not on my account, or and they just do it, they just cheat on us, or is the money there and just it isn't showing up on the report? That's for me hard to digest.
Yeah, because I don't check day to day. I check normally at the end of the month. So I don't know. I assume they put it in on the day that I'm supposed to get it, but maybe
And in this example, it was on the 31st. I run the reports and everything, but just this week I saw it was actually paid on the 30th. So it was not on the report in the 31st, which is really awkward.
Yeah.
Anyway.
Let's talk about Johnson & Johnson. We know that's going to be the news of the week. There was some talk about their settlement in around 9 billion, I believe they're going to pay out over, wait for it, the next 25 years. I think we spoke about the litigation and not knowing how much it would cost. We said, to be fair, we did say it could be around 10 billion, and we felt they could soak that up, but 10 billion over 25 years is next to nothing for these guys.
Well, it's like, let's say 340, 350 million per year, right? So you need to reduce the free cash flow already in your expectations with that one. But I think it's good that they do it because it now just gives clarity. And what I understand here is that they are about to get 75% of the threshold of the claimants that they need to get past. So if all goes through, then I think I think it's a reasonable deal. The victims, the patients, they get compensation, but it always makes me think again about this jury system that they have in the States. So there is no scientific evidence. That's what Johnson & Johnson claims. They think they have a strong case there, but they still settle because probably they think like the opinion is against us. So if it comes to the jury, but on the other end, maybe this science is strong enough, and Johnson & Johnson is just trying to create smoke and mirrors all the time, right? We see the same with Bayer and Monsanto. For me, because we don't know the science as retail investors, it's really hard to judge who's right and who's not right.
Yeah, I mean, we're never going to know, and you're right. If it goes to a jury, you're thinking of common people, and automatically, if you go in against a jury as a big corporation and there's a lawsuit against you, it's probably natural for the person, maybe unintentionally, to be a little bit biased towards the people that have been affected by a big corporation. So no, I can understand why they would settle. Look, it still has to be approved. It's not approved or anything yet, and I don't know if Europe or anything like that is included here, but
no, it isn't, and that makes it also awkward. But we know that also with Dieselgate and such.
Yeah,
I think now again there were some litigation cases in Europe, but in Europe we can't make a fist against companies like this. We have a total different jury system as well. So, of no jury system, but a totally different legal system. But yeah, anyway, I'm happy there's clarity. The share price reacted on it, responded on it. It's like 7-8% higher since then. But I had luck. I could buy some, at the 3% yield 1 or 2 weeks ago. So I took my fair share in Johnson & Johnson again. And yeah, I hope the company can now focus more on the spin-off and on the pharma and consider this as an admin job going forward here.
Yeah. Cool. Let's talk about some dividend hikes. I don't think there's too many. FedEx is one that comes to mind. Had a 9.6% hike to $1.26 every quarter.
Yeah, and that's a nice one, right? So UPS is the other one that did a really large dividend hike. Was it 2 years ago?
Yeah.
FedEx always struggles a bit with their free cash flow, so that's what I find really interesting. But they continue hiking the dividends, so they seem to, at least for now, still be doing something well. Yeah, and the other one then I think that some people will really like is that Constellation Brands hiked their dividend by 11.3% to 89 cents per quarter. So 8 years of dividend growth now, but that's a juicy hike again, double digits. I like it. I don't own them, but I like it.
Double digits and not bad for beer. I think they're a beer company, are they?
Yeah.
So not bad. Cool. So this week we're going to look at some Swedish stocks. I think we have seven companies that we're going to go over. It's not an in-depth analysis on any of these companies, but stuff that popped up on our screen or so. Maybe you might want to take the first Swedish company.
Well, actually, before I go into the first Swedish company, just in general, right? I don't know how you liked it with the research, but I was surprised still about how many stocks there are in Sweden that are proper dividend growers. I will probably need to do more due diligence, but it might be that actually 1 or 2 more deserve to be in the Noble 30 index. So that's also really interesting. I didn't check the market caps yet for those. So that's already good news. And, there's always this thing then with Sweden still that you pay a 30% dividend withholding tax, right? So it's one of the higher tax countries. I checked one time at the forms that you need to submit to Sweden, and you really need to have the stock certificates with it, or the dividend certificates, which is not easy at the broker of the hero. So that makes it a bit harder. But other than that, the process seems to be fairly easy with the Swedish government. So, for now, let's do this Nordic country, right? But how did you look at it when you were analyzing it? Was there anything before we go into the first stock that caught your attention, or just in general, your experience?
Yeah, I mean, there's a lot of companies that I didn't know. Obviously, looking at that, I did get a little bit of help. I cheated a little bit. I had one of our community members, Alan, help me out with a list of companies. I thought it was a good starting point because, going online and trying to find dividend companies in a certain region, it's always hard, especially when you don't know the names of the companies, and it can take quite some time. So he helped me out with a list of companies, which was quite good. And yeah, as I said, there was a couple I expected. ASSA-B.ST was in there. Investor we hear a lot about, or Investor AB, and they're not quite so high. I was quite surprised with that. So there was some surprising things, but yeah, there's one or two companies here that I kind of like their business model, and we'll get into that a little bit, like evolution and stuff. So it was a good exercise to do, because there's lots of companies that you don't hear about or you know of, but you don't actually associate them with a country, which is
exactly.
and that's always fascinating. And look, I have one company, ABB. That's going to be a toss of a coin. Is a Swiss, but yeah, it was.
Why do you pay the dividend tax?
Switzerland.
Yeah, you've got your answer.
Yeah.
Okay, so let's get started then. Yes. So the first company that caught my attention was AAK.ST. I think it was formerly known as Aarhus. Effectively, it's a global Sweden-based company and producer of vegetable oils and fats. And it was founded in 2005, and it's nowadays called AAK. Actually, the company has been increasing their dividends for 17 years, which is really nice. So since 2006. If I look also a little bit at their financial performance, it was making around 27.5, I guess, billion in sales in 2018, and now almost double of that in 2022. And we are talking about Swedish crowns, right? I believe the currency is like 1 on 10, 1 on 11 when it comes to the euro. Yeah. So probably it's like 5 billion in sales here, but almost doubled it. And specifically the difference, the delta between last year and let's say 2021 and 2022 was enormous. And it might be also due to acquisitions. Some probably our readers can say that. But if you then look at, for instance, the earnings per share, it was 5.21 in 2018, and it is now 6.84. So it's still decent, but not as much probably as you saw that the sales were growing. What I also liked is that their dividend per share was that today is 2 crown and 75. I don't know cents. I don't know how you call this in Sweden. I probably should have done a better due diligence there. But if you just generally look at the numbers, it's mainly to the right, like always, but onwards and upwards. Yeah, I could expect a little bit more better growth, I would say, from the underlying earnings, but the dividend per share is a really nice staircase model, which I really like. And look, the dividend yield at the moment is 1.5%, like 1.5%. So it's not something to be really happy about if you want to enter a position right now. Though the 5-year compounded annual growth rate is 11% and the payout ratio is 40%. So definitely it's something, it's a stock that I will add to my watch list in general, in the list that I have of European tickers. And yeah, an interesting one. I don't know much more about the company further. So it's definitely when the yield comes into range that I would probably do some more studying here. And yeah, maybe also good for the listeners. Don't worry, we will put all the tickers that we are discussing here in the notes of the show, because these tickers are sometimes really hard to pronounce or to spell, because sometimes they have an -B or something like that in it. So yeah, that was from my side, AAK.AB, that caught my first attention.
It's a fascinating one, isn't it? Because they are a producer of vegetable oils and fats. And to me, at least, it seems like that's a business opposite to what the likes of Warren Buffett would talk about, that is easily to replicate. I'm always fascinated how companies like this that make something I think is a generic product. I mean, there's many different types of brands of vegetable oils and fats and stuff, and how they can actually make it into like a giant company that generates billions in income. It's quite interesting. Obviously, I don't know their brands, and they probably own probably some brands on our shelves that we don't even know about. I'm sure they do, but it's yeah, fascinating. I always love seeing companies like that do quite well.
Good. So what was the first company that caught your attention?
Yeah, the first one that caught my attention was VITEC Software Group, ticker symbol VITB. And these guys are a software group, but they operate on this SaaS, this SaaS model we often hear about on Twitter, software as a service. And they actually are involved in loads and loads of different industries. So they supply software for pretty much everything from hair salons to bars to everything. And I counted roughly around 36 different subsidiaries. So they have 36 separate entities within that group across every kind of range of business that you like. And I quite like that model. It looks like they've positioned themselves quite well. We know this SaaS model has lots of growth potential, particularly as you become reliant on a piece of software and what it does. And when you're paying for it every month, and they tend to increase their prices, don't they, every couple of years by a couple of Swedish crowns here, a couple of Swedish crowns there, which you don't quite see when you're paying for it. But the revenues has nearly 10x over the last 10 years. Now, nearly, it's probably more about 8 to 9, but it's been really, really strong, their growth. The margin levels are quite steady. Their free cash flow has been growing. It was 31 million back in 2013. It is now 545 million. So again, quite significant growth there. They have paid 21 years of consecutive increased dividends as well, which was quite something as well. I think what does it need to qualify as Noble 30?
Around 22, 23 years.
23. So they should get that next year or the year after. They carry very, very little debt. There's a small bit, but it's around 50% debt to equity as well. So it's a nice company. It's a good business model. And as I said, I like that they have it split within the different entities across all the different markets. I tried to look up some of the softwares that they had. I didn't know many of them, but for some of our Nordic friends, they do own like SchoolSoft, which is software for schools, I presume in the Nordic companies. They own Visma SPCs, which is accounting software, and they also have software called, I'm not even going to pronounce it, but it's a construction industry software. But they have over 100,000 customers based in Sweden, Norway, Finland, and Denmark. So they're very condensed within that region. And I could see actual potential there that they could maybe grow into broader Europe as well if they are successful there. But it's an interesting business model. Giving you some stats about them. Their dividend per share is 2.28 Swedish crowns. Their share price is 524 Swedish crowns. The dividend yield is 0.75. The 5% CAGR rate is 29%, and the payout ratio is 58%.
Really nice one. And it's also sometimes good to hear a SaaS company that actually earns decent money. Instead of all these SaaS companies from COVID times that were like to the moon. So this seems to be like such a boring one that grows really quickly.
This one has been around for quite some time. Obviously, it has a 21-year history, so it's been there. It's gone through the motions and survived even Corona. SaaS kind of became popular on Twitter at a certain point, and people even tried to sell ebooks and build their own SaaS models as well, which kind of got a bad rap. But it's like you, I was really interested to see that there is a SaaS model, and it's doing extremely well, and the growth has been phenomenal over the last 20 years, and I see lots of potential for something like this.
There are not so many companies that you can say they 10x.
Yeah, not quite 10x, but I mean, close to it. Like it's pretty good.
Wow. Hey, look, I'm European DJI. I just have to talk about ASSA ABLOY. Right. I mean, the locksmith, one of the oldest jobs in the world. ASSA ABLOY. So for the people that don't know this company, but they make the famous locks, these big ones, and they're even lock picking contest and such to do that. But you will find doors from ASSA-ABLOY. The other day, I was in Warsaw in such a big shopping mall, and I saw that they were constructing another wing, and I saw an ASSA-ABLOY door still in the package there. So, it's everywhere when you start looking at it. They make gates, entrance automation, they're also controlling access, and these in offices when you need to use ID cards and such, and tags and biometric identification systems and such. This is all ASSA-ABLOY. Effectively anything related to security and equipment and such that you need. Look, they have been introducing their dividend approximately around 1995, and since then they have been maintaining or increasing their dividend already for 28 years. They had to postpone a little bit the dividend during the Corona crisis, but later on they were still able to pay it. Now, if you then look a little bit into the finances, what I found really impressive is that over the last year, they grew their sales by 27%. 27% for these are like Microsoft numbers. Yeah. Now, 12% of this was organic growth and 13% was Forex, but still 12% organic growth. It's a lot for a company like this. So they had around 120, what is it? I guess 120 million Swedish crowns or billion. It's hard to understand from the numbers here. But their EPS at the moment is around 12 Swedish crowns, which is again an increase of 22%. Also, their operational cash flow grew by 19%, and they have a return on employed capital of 17%. So this is also really a compounder, right? High margins, good compounder. What I also like is that this company is continuously acquiring small companies. So last year alone, they completed 21 acquisitions of about sales in 7 billion in sales additional a year. So for me, it's a company. It's like many brands. It's just compounding brands even and gobbling everything up that it can. And also, of course, one of those beautiful dividend aristocrats from Europe. Now, at the moment, they pay a dividend per share of 4.8 Swedish crowns at a share price of 230, gives it a dividend yield of about 2.1%. Here again, 5-year compounded annual growth rate of 11% and the current payout ratio of 40%. I mean, this company, if you look at it, it's like beautiful everywhere, like how it's doing. It's always just a bit share price, but honestly, 2.1% dividend yield is not too bad for the company.
Yeah, I mean, it's top quality. That the company, everything you explained there is, you can see why it's doing so well. And I love how they've kind of not pivoted, but they've moved into like controlling access with keys, cards, biometrics. That's really, really huge these days. And it looks like that they manage their acquisitions quite well. That's not an easy thing to do, to buy so many companies and integrate them in. But yeah, it's a good company. Look, I think the problem with most of these companies that I've seen so far is the yield is just a little bit too low based on the tax that I'll have to pay. Because as you always say, it's yield after tax. But what is it? 30% tax you're looking at?
Yeah,
as
1.4 yield. Yeah.
Exactly. Yeah. So it's a little bit on the low side. So it's always valuation with these guys. But certainly, if you're from the Nordic region and you have a better tax rate, I would definitely consider these guys as a staple in my portfolio. Yeah, quite good.
Yeah.
Okay, so you mentioned your European DJI. You had to pick them. Well, I'm engineer my freedom, so I had to pick ABB Limited, and I know it's dubious. I know that they are on the Swiss Stock Exchange, but a little history lesson about them. They were formed by two companies. The first one is a Swiss-based company called BBC. I think they were Europe's first large-scale combined heat and power plant producing AC alternating current. And then the Swedish side was a company called it was ASEA, so ASSA or ASEA, and they were manufacturers of lighting and generators, and they actually were one of the first people to have motors as well. So they were involved in the invention of motors. So I'm basing this on that side of the company. Obviously, they formed to make ABB, which is ASA. ASA Brown Boveri, I think it is what it stands for. They generated ABB in 1988. As I said, it's a company that I like purely because I think there's good growth potential on that. But looking at past numbers, it is a slow, like revenue has been slow, dividends per share has been slow. So I wouldn't be buying them based on valuation at the moment, but I just think that electrification, automation has really, really good potential over the next 5 or 10 years. They do tend to pay out roughly about 50% of their earnings in dividends, and they do have a solid dividend history. Their dividend per shares at the moment is 0.84 Swedish crowns. Their share price is roughly 343 Swedish crowns, which gives them a dividend yield of around 2.43%. The 5-year CAGR is quite low, is only 1% dividend increases, and the payout ratio is 68.6%. And these are all based on Swedish crowns. Actually, if you look at those numbers on the Swiss exchange, they actually look quite different as well. So obviously there's currency fluctuations. But look, it's a company I speak about on this show a little bit. It's a company I like. Valuation is one thing, and they are a little bit too low in yield and too low in growth, but I think there is definitely good potential for them going forward.
I'm long Siemens.
Yeah, Siemens are definitely, but they're in a different field. But Siemens are a better all-around company without a shadow of a doubt. I would not even contest that.
Well, I've got positive experience with ABB as well from past work experience, and like you say, it's a bit the bummer of the dividend tax here, specifically the Swiss one. But other than that, a really nice company. But to stay a little bit in your domain, then, Derek, how about SWECO AB? And it's SWECO. That's how you spell it, SWECO. Did you know that this is a European engineering consultancy company active in the fields of consulting engineering, environmental technology, and architecture? So effectively, they're just designing buildings and community infrastructure. They do this for instance, in the sectors of buildings and urban areas, water, energy, and industry, transportation infrastructure, and general architecture. And I really love one of their projects that they did. This is such an automated bridge that can be easily, steered from nearby. But if you see such a bridge, they are huge. And I remember that from the Netherlands and such. These are really, really complex architectures and projects. So SWECO is effectively doing this. So it's a lot of analysis, calculations, studies, planning, design, and also some of the designing and constructing of what they need to build. I mean, the company, started really to pay a dividend from 1999, and they have around 24 years of growing and maintaining their dividends. So this one actually, depending on some more criteria, could also be a potential candidate for the Noble 30 index. Now, what I really like about this company is that it's present in the Nordics, right? Sweden, Finland, Norway, but actually also over here in Poland, Germany, Czechia, Netherlands, Belgium, the UK, and Ireland. So it is really looking at North Europe. It has about 18,500 full-time employees. So this is a huge company. Yeah, and honestly, before today, I never heard of it. Never. So, but there are just like almost 20,000 folks walking around every day, going to the office, maybe nowadays, but working from home, that work at this company. And probably They have designed a lot of the stuff here in Poland and in the other countries that I'm maybe making daily use of, a bridge or something like that, that might have been designed and engineered by them. What I also like again here is that they are doing a lot of acquisitions. They buy these little companies all the time. I guess these boutique consultancy firms with a bunch of architects in there. So they bought around 12 this our last year, and they added again 400 experts there. Now, if we then look at the dividend, because that's what we're of course most interested in here on Dividend Talk, they pay a dividend per share over the last year, I think anytime soon, of 2.7 at a share price of 130, gives it a dividend yield of approximately 2.1%. But hey, here again, 10 years compounded annual growth rate, again a double-digit one over the last 5 years, and a payout ratio of approximately 59%, slightly below my threshold of 60% in the screener. So also here again, ticks all the boxes for me from a screener criteria. Really nice, interesting company. I'm not really investing in consulting companies and such. I don't know. I don't really have a proper feeling for it for the long term, let's say. I find this always a bit, what they're selling knowledge. Yes, so and they grow when headcount grows. Typically, their sales grow as well. So, but other than that, actually, it just looks good. Looks like a really solid business from what I can observe when pulling it through the screener.
Yeah, it looks quite good, and interestingly, I have seen their signs over here before, and it's when you brought these up, I was trying to think to myself, where did I see these? And I had them. I thought they were actually more involved with windmills and so on, because that's where I triggered them for. They were on a project here in Ireland, up in Arklow, with one of the wind farms here. Obviously, they were consulting. I didn't even look into them, but I just remember at the time I was in college. I remember seeing this company, and I thought they were actually involved in building that. So I just assumed that that's the industry they were in. I didn't know that they were consultants. I'm like you on that edge. I don't know if I can invest in a consultancy firm, but if you look at someone like McKinsey, they seem to do quite well, and it's like it's reputation based, isn't it? It seems like once you build up that sort of reputation, companies in Europe, it's almost like a badge of honor that you have this company advising you. Maybe it helps getting bank loans and getting investors and getting so on. So there's probably a reason for that, but I would struggle to invest in them. But based on numbers, they look quite good. And looking at some of the projects that they were involved in, they are in some pretty impressive projects. Like you said, the bridge, there's wind farms, but there's everything from huge roads to infrastructure. So it's interesting. It's an interesting business. Business.
Definitely one that I would call a discovery for me.
Yeah, of course, and it's a company now that I will stand up and take note of when I see it a little bit more. But yeah, no, that was a good one. It piqued my interest when you had it there. So good one. Okay, let's move on to one of my former passions. And there was a period of time when I used to like to play gambling online. Let's say I spoke about it before in terms of sports betting and what I used to do there. But there was a part of me that used to like casinos. I was obsessed with trying to beat roulette. I mean, I studied every mathematical thing possible. It's not possible, guys. It's not possible. But one company that popped up on my radar is Evolution AB. And like that, I've heard of them purely because I use some of their services online, particularly with companies called Betfair, who actually use these guys' services. So what they are, they develop, produce, and market B2B online casinos for gaming operators. So what that means is I can sit here in my chair, I can open up the internet, and I have a real person looking at me, and they are dealing cards or they're spinning the ball for the roulette, and it gives you the feeling that you're in a real kind of casino, even though you're not. All you're doing is losing money and making them rich. But it was, again, interesting for me to see that these guys are based on the Stockholm Stock Exchange and are actually based in Sweden. I think it's such a clever business model, particularly. I don't know about Central Europe, but I definitely know over this side of Europe and also America and Asia, which are the markets that they're predominantly in. The betting culture is quite strong, and they're the markets that they target. Obviously, Europe and Asia are the top two, and America, as their laws are starting to become more and more liberal, I'd say, in terms of betting, they're starting to target that area as well. So they have over 1,300 live casino tables worldwide. The beauty about that is they could have the same person probably spinning a roulette table or dealing cards to me here in Ireland and to you in Poland, and we wouldn't know any different. So it's really, really, really good in terms of a business model.
And maybe we should do one time with our dividend talk followers that we do online betting and, waste our dividends on it.
Waste our dividends. I mean, look, I spent a lot of time on that stuff many years ago, and it's like the thrill when you get a dividend when you win, but the difference is you get the feeling of a cut dividend or someone cutting their dividend more often when you lose, and it's really frustrating. But let's look at their numbers. In 2013, their revenues was 38 million. Okay, you fast forward 10 years later, 9 years later, the revenue is 1.4 billion. So quite impressive growth. I'm looking at the gross margin here on my Kaifin is what I use. It's sitting at 100% profit. This is what they have, which is ridiculous. I don't know if that's true or not, but that's what my screener has. Their net income again has gone from 7 million in 2013 up as far as 843 million in 2022. So we're seeing some impressive growth, aren't we, over that time? Yeah. Free cash flow is following pretty much the same story, 7 million up to 816. They have zero debt on their balance sheet. A really nice balance sheet as well. It just seems like a money-making machine. My only issue is their payout ratio is quite low, but they seem to be reinvesting that into the business more so than paying out dividends. Payout ratio is about 5%, and their dividend yield is about 0.15%. But the 5-year CAGR, so they are increasing it quite aggressively because they can afford to. And the 5-year CAGR is 61.86% for their dividends. So they are increasing it. It is a low yielding company. And you can see why it's trading at a high valuation with numbers like that, with growth like that. It's quite sensational, and I could see them doing similar numbers over the next 10 years easily.
Who would have ever thought that Sweden would have such a company, right? I would have expected the UK or something like that.
Yes. So I honestly thought, because I know, say, Betfair, which is one of the ones I would have used. Mm. They are owned by Flutter Entertainment, which is UK based, and I just assumed Evolution was a part of that. Evidently not. But yeah, I was really surprised that they were based in Sweden, and it's such a clever business, I think. And nice. I mean, all you have to do is get a pretty girl and get them to deal, and you have people hooked, and that's what they have.
And we know that in Sweden there are a lot of pretty blonde girls, so there should also be enough of that.
Yeah, exactly.
Good. So hey, then let's go a bit back again to a bit more boring stuff, because the last company that I would like to speak about is a real estate company. And we know what happened to Castellum, right? After this chaos in the board there. This one seems to be a little bit more stable from that point of view, and it is Wilsborgs-Fastigheter AB. They have 17 years of increasing dividends by now. Effectively, they offer commercial premises to companies and organizations in the Öresund region, where they are the market leading in the 3 main Swedish cities. I believe Malmö is one of the cities where they take the most properties and the most income from.
Makes sense.
They have customers both in the public and the private sector, and it is both office and retail premises, logistics, and production premises. So it sounds like a relatively good mix that is not only office, yeah, like we see with some companies in the Swedish real estate market. Their property value at the moment is around 55 billion. They own around 300 properties. Largest shareholder is Erik Paulsen of 11%. And what can I say more? The rental income increased around 9% compared to last year in 2022. Also, I said income from property management increased by 3%, and this is the main metric that you look in if you scroll through reports about real estate companies in Sweden. And the dividend per share at the moment is 3.1% at a share price of 79. It pulled up a little bit again. It was a few months ago at 67 or something like that. But finally, we have a company here in the list with a decent yield because it has a dividend yield of 3.9%. And here it comes. 5-year compounded annual growth rate of 14%. And this is what really surprised me because this is a big double-digit grower. And currently a payout ratio of 57% based on their, cash flow, funds from operations, however you want to call it.
Yeah. So don't do it. I can see your eyes lighting up. You've got burned by one Swedish real estate investment trust.
No. I'm not investing in these because I would first need to do way more research.
Yeah.
But they pay at the moment, right, the 3.10 Swedish crowns. Dividend. It was a small hike, the last one, 3%, and I'm not surprised with what's all going on in the Swedish real estate market. But look, in 2017, they paid half of this. Yeah. So that means if it would do the same again, then in 5 years from now, it would pay almost an 8% yield on cost. So I don't know if it's possible for this company. It depends probably on how they increase their portfolio. But 17 years of consistent dividend growth, right? No flat year in between here, pure growth. So that's quite impressive, I must say. And I hope they can continue doing this. And finally, is a bit of a decent yield in here.
Yeah, and look, they do seem a lot more diverse, don't they? As you said, office property, but they seem to be spread between public and private sector as well, which is sometimes can be a little bit more stable for them. So interesting. I always just find it hard with real estate investment trusts in areas I don't really understand because I don't know the dynamics well enough to make a decision. And when I'm reading, I can read the annual reports, they give you all the fluff, but I don't get a real sense of what the market is like over there. So I'll stick to UK and Ireland. At least I can understand it over here.
Well, did you invest in Vonovia by any chance?
I did, and I sold it.
Oh, good for you.
I think I said I sold it a long time ago because it was in the too hard category. It's just I found them really hard to understand and
nice. Yeah. Good. So these were, I believe, 7 Swedish stocks that we discussed today. And we know there are some other popular names like Volvo or, Investor AB and such. We didn't discuss them because they didn't have spotless dividend track records. So that's the main reason, I would say. But it was really nice doing this. And I'm looking forward also for the next country that we will do.
Yeah, I mean, I have to say, look, there was 16 companies on our screener. It was quite random, I would say, how we decided on what ones we're going to pick. We could have picked probably some others, but it was definitely a good exercise to do. And there's still, as I said, some more to explore as well. So, look, I'm definitely curious, particularly from our Nordic friends, what do you think of what we said about the companies that we presented, and maybe which ones did we overlook that we shouldn't have overlooked? Maybe more importantly, let us know. Let's jump on to some listeners' questions. So the first one is from Yarosin, and he's asking about value. What do you think are of good value today? He's looking at ABB, ASSA-A.B.ST, and ATCO?
Yeah, so I think historically, I would go for ASSA ABLOY in this list because I find them, if you look at the share price, how it has been trading in the PE ratio, and then also, how is it, the recent growth the business was going through, I find them the most attractive at the moment. Still knowing, of course, that the yield is kind of just 2%. But yeah, I would go for ASSA ABLOY.
Yeah, it makes sense. I spoke about ABB. I think from a valuation point of view, I think they're a little bit overvalued. So I'd probably agree on ASSA-ABLOY. Derek has asked us, what are our thoughts on Loomis? Do you know what? Do you know what? Reading the questions, I've had a brainwave. We should maybe ask these questions before we do all our research, because Loomis are obviously on the stock exchange, on the Swedish stock exchange, and it might give us actually ideas a little bit quicker. We didn't really look into them, but I do know that they are, if I'm correct, that they manage cash in transit, with the banks and money management systems. We didn't look into them, as I said, but from my screen now, they have a 3.35% yield, which is better than some of the companies we've presented. They have quite an impressive annual CAGR. So over the last 3 years, it's been 29%. Last year, they increased it 41%. But again, I think in 2020, with the coronavirus, they dropped that down. They cut it in 2020. It was growing solidly up as far as 2020. They cut it in 2020, and it is growing again, but still not at the level as it was in 2019, which is not good, to be fair. I would have thought they would have at least maintained that. If I was to look briefly at their metrics, or some of the metrics I like to look at, their revenue has been pretty good. It's grown from 11 billion in 2013 to 25 billion in 2022. Their earnings per share has grown at a similar rate. Free cash flow per share is quite steady as well. It's, 554 million up to 2.2 billion this year as well. So there's actually some good growth in this company. As I said, it had a good dividend history pre-coronavirus. It looks like they're going to continue at that. They have a reasonable amount of debt on their balance sheet, and they're well able to cover their interest expenses as well. So from a metric point of view, I would definitely be interested in a company like this, and it seems like they have a good business model as well. So yeah, decent company, I would say. And as I said, a better yield than some of the companies we picked.
Nice.
Alexandros has asked us, have you come across any hidden gems in our Swedish stocks? I would say Evolution is definitely one, I would say.
Yeah, and I liked SWEC-O. Well, maybe the Discovery. Hidden gems, I don't know, but the Discovery. But if it's a hidden gem, it's Evolution. Yeah. Just not, I would treat it rather more as a growth stock.
Yes, exactly. Yeah. Matthias has asked us, do we have any thoughts on Axfood and HPOL?
Well, I looked into Axfood also a little bit here. We didn't pick this one. I believe it is 14 or 15 years of dividend growth. It cut the dividend during the great financial recession, if I'm correct. For the people that don't know, Axfood is, I believe, in Sweden, the leading food retail group and the second largest player in the food retail market, with a market share of approximately 21%. I've looked into them. Everything looks decent. The dividend growth is a little bit, not so much, and also dividend yield is, for me, not attractive enough. So I believe they have a dividend yield of approximately, now what is it, 2.something%. Let me quickly check. Okay, almost 3% dividend yield here. But a 5-year dividend CAGR of just slightly above 2%. So for me, this is just too little for a company that grows so slowly. Then I can better go for this, for this real estate company that gives you 3.9% and then a 14% compound annual dividend growth. So that's how I look at Axfood. And if we look at HPOL, So HPOL is the leader in as how they call themselves, right, in the field of advanced polymer compounding. It's actually quite an interesting stock from what I have seen, and it has a dividend yield of around 2.9% as well, so similar to X-Food. But here the 5-year CAGR is 13%. So even if you compare those two, I would definitely go for HPOL. It pays a 3.6 crown dividend right now. And yeah, this is just purely based on some basic metrics from the screening criteria.
Nice. HPOL looks interesting. You mentioned polymer, which I think is like plastic PVC. Comes to mind when I speak of that. So it seems like it has a pretty good business. I didn't look into them at all, but as I said, I probably agree with your assessment. Looking just purely at the numbers and nothing else, HPOL seems to be the better pick. Boris has asked us, is there any options to trade such stocks outside of the country? I'm guessing you're talking about Swedish stocks. Trading, I don't know, but I assume you can on Interactive Brokers. I can buy and I can sell.
Yeah.
So I assume so.
Yeah. So I can't trade options on Interactive Brokers. They don't allow me based on my profile. Probably I ticked a box somewhere that pushed all the red flags. So I have no clue.
Yeah. I mean, I don't know if he's asking about options trading or is there an option to trade? I don't know, but
Yeah.
Look, I assume Interactive Brokers has hundreds and hundreds of markets. I'm sure you can.
Yeah.
But the best place to ask is their customer service.
But we can buy them at the Giro, the Swedish stocks as well.
Yeah, of course.
Because I was owning them. So
yeah. Okay, we got a question about Fresenius's share perspectives.
Oh boy. Let's start with the business, right? The hospital business is not doing so well. Fresenius Medical Care cut the dividend, which was their daughter company, let's say, by 17% or something like that. I believe the Fresenius kept it flat, if I remember correctly. Look, the price is really in the dumpster. So if you're looking at it from a valuation point of view, this stock is, I see it, could bounce if you want, but for me the company is just not performing well. They start to change the strategy. Probably they are laser focused now, but I had them for a while, 2 or 3 months. I threw them out of my portfolio really quickly because in my opinion this company is really struggling and I've got enough turnaround plays in my portfolio.
I mean, on the face of it, it's really frustrating because on the face of it, they encompass so much of the healthcare segment with all their different holdings that you would imagine that they are set up for success. But in actual fact, it seems that their business model is so complicated that management can't really get a grip on what to do correctly, and it's frustrating. But history's on their side. I mean, history is on their side, but
I studied their history, right? And it's really a beautiful story. I would definitely recommend everyone to study a little bit for Fresenius, just the history page on the website, and how I forgot the name of the lady because it's not an easy name to remember, but she effectively built this company up. It's one of the, I would say, one of the most probably iconic German entrepreneurs, this woman, and it's just a really nice story.
Yeah, I sold my shares a long time ago as well, again in the 2-hour category, and just before they cut their dividend as well, which was nice. But the share price has tanked massively, hasn't it? I don't have it in front of me, but yeah, I'd say a lot of people have lost a lot of money on Fresenius at the moment. And Boris has asked for, and I'm going to ask you this one, your perspective on CIBUS Nordic.
Yeah, it's a bit more in the risky category. First of all, they don't have a proper credit rating here. They're working hard on that. Not easy for them. But you know, if you like dividend yields and high dividends, then this is definitely one for choosing. They currently have, I believe, what is it, an 8.2% dividend yield or something like that, 8% dividend yield. And I honestly must confess that 2 or 3 weeks ago, I bought some more. It was just too juicy for me. They cut the dividend from 0.99 euro cents to 0.9 to make sure that they are well positioned for their financial obligations. They also had to issue some bonds or something like that. It's a really tough market for them at the moment. But yeah, I bought some more. It's one of my high yielders, I would say it. I understood the small dividend cut, but if you look at their whole story and they're committed to the dividend, you know, I'm high dividend yielder for me, and it can, yeah, I expected it that it could cut it. Luckily, a little bit. And what I like, it's in the simple business. It's effectively having supermarkets as tenants. You know, I mean, how simple can it be?
Yeah.
The only thing they need to do is make sure that they get a proper yield on those properties and that they clean up their balance sheet. The company's not too old yet, so they're still in this kind of early days phase, I would say.
Nice. Johnny has asked the question. Actually, that's not his name, but he politely said I can call him Johnny because his name is quite hard to pronounce. But the question is around your approach to buying quality companies such as Texas Instruments, but where there's short-term headwinds. So you expect their profits and their revenues to decline in the short term. How do you go about valuing such companies?
Well, you just take it into account. Yes. So how I do it, I look at let's say the upcoming 10-year free cash flow, and if you believe, let's say, that it goes up and down, you are just more conservative in your assumptions, or you just take the first 2-3 years lower and then you think it's back on track again. Because in the end, for me, the value of a company is just a sum of future cash flows, free cash flows discounted to today, because money costs money and money is less worth in the future. The same euros, less, you can buy less for it compared to today. So that's what you need to take into account. But in the end, it's just the sum of all free cash flows.
Yeah, and if you're correct, it means you might get Texas Instruments because you expect the share price to follow, don't you? If you're going to see like profits decline, revenues decline for a short, if say it's 12 months, 18 months, you'd expect the share price to go with it a small bit. So it might present actually better buying opportunities as well.
And that's what we read in the books, but sometimes I'm flabbergasted how companies continue to be so high in their share prices, right? But look, Maciek, I've got, how I say it, I've got a video about how to value stocks. It's on my YouTube channel, so have a look there, and hopefully that clarifies a little bit. You also get, how I say it, you also get a sheet with it that you can copy and then make your own calculations.
Okay, Rasmus has asked us about our thoughts on Volvo, Bahnhof, Investor, AB, AXFO, and AAK, some of which we've given opinions on already.
Yeah, really simple, maybe just about Volvo. I don't like investing in car manufacturers.
Yeah, it's really hard, but you know what? I'm really tempted by BMW lately. I really am, but yeah, it's so hard to invest. But Volvo is always, for me, it's always a symbol of safety in cars. It's always one of those cars that you know is really safe, really sturdy, really good, has a really good brand name. But I don't know enough about them financially, and we spoke about some of the others already. So yeah, interesting.
So for our Dutch listeners, I believe the acronym of Volvo means in Dutch, volgende onderdelen liggen verderop, which means like the next spare parts, you can find them a little bit further down the road.
Nice. Adam has asked us, he's a 25-year-old investor. Would you say it's better to focus on high yield, low cost stocks earlier on to maximize income now so that I can reinvest into higher quality, more expensive stocks later on?
No, I would do the way around. You've got time on your side. So if you're investing for the next 20, 30 years, oh man, I would go more for low yield, of course, at a reasonable price, but you can be a little bit, let's say, more opportunistic there. I would do it the way around.
Yeah, I mean, to me, it feels like you're chasing yield is the way I would say it. I get it. It's hard, and we all do it. But
Yeah.
with time on your side, you can definitely focus more on higher growth companies, I think.
Yeah. Was it two shows ago or something like that, right? When we had this guy also still relatively young with an awesome portfolio.
Yeah,
I forgot which show it was, maybe number 141 or 140, but Adam, have a look there. This guy had an awesome portfolio.
Okay. Billy has asked us, when it comes time to buy a new position, do you guys ever looked at which sectors are taking a beating recently and then look for the best dividend stocks in that sector?
No, not really. But, I've been buying lately insurance stocks. Why? Because insurance was beaten down, but I was still looking at more at the screener, and just insurance stocks started to pop up. So I guess left or right, it still pops up. So why worry about chasing sectors, and just look at the stocks? And we often say, right, we know when the energy sector is beaten up. Yeah, because we see it in our portfolios.
Exactly. Yeah. I think if you run any sort of screener, it becomes apparent if a certain sector is under pressure, because you'll start to see a lot of different companies from the same sector pop up. You're probably going to see that now more in the finance sector than most others. But yeah, I think it becomes obvious. I don't think I actively go out to do that, but I think it just happens as a consequence of what's on sale at the time that you're buying. And then maybe the last question is from Marek, and he asked us to give us an opinion about JM.ST. And again, I think we missed a trick with this company. We spoke about companies with different yields, low yields. Well, this company has an 8.16% yield from Sweden. The growth rate is quite low, but you don't need a really high growth rate with a dividend yield like that. They develop and sell housing in residential areas in the Nordic area. So basically a property developer. If this was an Irish company, it'd probably be snapped up by me straight away, because those type of companies would do quite well over here. But again, I don't know enough about the region. I flicked through their annual report. It's actually quite nice. They pay decent dividends. They have a really good history. Yeah, it's a good company, and it's one that we missed. I just don't know how I feel about owning a property developer based in the Nordic region. If I was from the region and knew more about that, I would definitely be interested in this company. Definitely as a high yield play anyway.
Yeah, really nice one. Really nice one. Didn't meet my screening, but I'm looking at it now, and I see they have been, since the financial recession, nicely increasing dividends, and quite decently. So
yeah,
I want to maybe look into one time.
Yeah, I mean, I said their annual growth rate was quite low. It's 3 to 4%. It's still decent.
Yeah, but
on top
if
of
you
an
have
8% yield.
yeah, exactly. We're talking here about the Chowder rule, almost 12%. So, good catch, Marek. Pity we didn't see it. Well, we live and we learn.
We live and we learn. Yes. So I think there were some good companies. We gave 7. I think we came across another 2 or 3 within the listeners' questions. So there's roughly about 10 Swedish companies there for our listeners to get their teeth into. And as I said, love to hear feedback from guys from the Nordic area. But again, thanks for all the questions. I think we learned more in the questions than we did when we were doing our own research.
Which was funny is because we put the main question on Facebook group, right? And I checked back 2 or 3 hours later. So, whoa, 14 comments. I feel like if we can just deal with this, hopefully in the show. I was a bit surprised here. But guys, it also shows that we have a really nice Facebook community. So also there again, join us in the Dividend Dog Facebook group and just have a conversation. Lots of European people are there as well. We are all struggling with the same issues when it comes to dividend investing, but also we have the same inspiration, and we really learn a lot there from each other. So join, can highly recommend that.
Good. And thanks for all for listening, and we will see you next week. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.